Folks, today we're going to talk about secure cybersecurity stocks that are on red alert. Now, whether you know it or not, but you, your family, your business is always under some type of computer attack. We are being attacked. Your computer, your phone, your tablet, your laptop, your network, even some of your appliances, if you have a smart home, are working overtime to prevent dozens of different types of attacks that we've become much too familiar with. Now, one example is ransomware. This can lock up data and even your entire network, causing you to be evicted out of your own system at will. Imagine that, being evicted out of your own computer. Talk about technology becoming too smart for their own good. Or how about phishing? Emails asking for account confirmations, asking you to click here, click there, click everywhere. How about malware, which can embed itself on any device and track your data without you knowing about it? That's something I'd like to install in my daughter's computer maybe, but we'll talk about that some other time. Now, these type of devices, these type of software devices are roaming in the net and just waiting to attack defenseless networks and systems that are not protected well. And with COVID-19, people are relying on their technology even more. And according to data, internet usage is up 30%, while computer usage is up 70% since the beginning of February, increasing the opportunity for a threat to your system at will. And there's plenty of other threats too, which is why cybersecurity is an absolute necessity this day and age. And even while business capital expenditures continue dropping in light of the COVID-19 climate we're in, cybersecurity products and services continue to become increasingly popular, and demand continues to rise rapidly. Specifically, between 2016 and 2021, spending on cybersecurity products and services continues to increase at an 8% annual rate, which is huge because it's a multi-billion-dollar mature industry. Remember Nordstrom antivirus 20 years ago? Or Norton antivirus? That's like 20 years ago. Things are becoming a lot more advanced since then. Matter of fact, the Bloomberg Global Infrastructure Software Index, which compiles leading network and security companies, it's up a whopping 65% since the beginning of March, substantially better than the S&P 500 during the same time period. And I believe this type of aggressive growth will continue, especially in light of the increased use of technology, which doesn't appear to be slowing down anytime soon. So, the first stock on my list is Zscaler. Ticker symbol ZS. It's a company that's very focused on cybersecurity. It provides cloud-based internet security controls for both fixed and mobile devices. It's a gatekeeper for companies around the US, protecting customers from all of the usual threats and attacks. Sales? They're up a year over year at 59.2%, and this is part of a longer-term proven record of sale gains. Over the past 5 years, revenue is up on average 51% on a year-over-year basis. That's the average. The company doesn't have much debt, and since its IPO in 2018 came out, it has given us a return of 659%. Currently, the stock is making new highs, has 8 strong buy recommendations, and a short-term price target of $160 per share, making it an attractive buy at the current price levels. The next stock on my list of cybersecurity companies is Checkpoint Software, ticker symbol CHKP. It's a leading provider of policy-based enterprise security and traffic management solutions. The company provides verifications and control products and services. And for service and internet providers, the company provides secure logon and protection from various attacks, including DDoS. Operating margins are very healthy at 44.2%. And in turn, the company has very positive return to shareholders at a 22.9% net. The stock has returned over 270% in the past decade, which is about 3 times more than the S&P 500, strongly outperforming the overall stock market. Company has nearly zero debt compared to assets. The company has ample cash, and the stock is valued at only 8.9 times intrinsic value and 5 times trailing sales, which makes the shares reasonably priced at this time. The stock is making multi-year highs, and I would wait for a pullback to the 50-day line before making a move on a relative strength basis. The sector should continue to see influx of capital in the short term, at least till there's a definite cure for COVID-19, and till then, these stay-at-home stocks will demand a premium for months and months at a time. Hope that helps. Folks, are you tired of being poor? Most of you don't know this, But as a kid, Lance Ippolito moved in with his grandfather, a middle school janitor. Later in life, Lance became a hedge fund trader, making his clients millions by turning Wall Street strategies on their head. Now, he's done making money for the ultra-rich and is ready to show average investors how to profit from the markets. And thanks to a little-known free ride strategy, he's about to reveal how you can capture triple-digit gains using the house's money. Are you ready to make it big? Click on the link below to get your hands on Lance's strategy today.